Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, and it's February 23rd. Again, this week is kind of light on the news week, but we do got the weekly jobless claims. So last week we had 238,000 people apply for unemployment. Forecast for this week was 237,000. And it came in at 244,000, so it only went up about 6,000. These are still good numbers here. We're still getting very low numbers. We've been kind of getting in the 230-ish range. Once in a while, kind of dip or jump up a little bit in the 240s, but for the most part, we've been in the 230s. And these are actually some of the lowest numbers we've seen since actually the 1970s. So we're seeing more people coming from the that were sitting on the sidelines before getting back into the market. So the labor market is showing a lot of improvement, and it looks like it's going to continue to do so as we see more confidence where the U.S. economy is moving towards. So let's go ahead and take a look here at the headline news. And stock market's a little mixed. They all started up earlier this morning when they first opened up. Since then, the S&P and the Nasdaq kind of dipped into negative territory. Dow's been dipping its toe in both positive and negative territory. So that's why we're kind of saying mixed, because the Dow's going back and forth a little bit. Part of it is due to the FOMC minutes that were released yesterday. Came in a little less hawkish than what they kind of anticipated, especially after comments afterwards saying rates would rise sooner than later. And the minutes did state that, but here's how they're looking at the Fed. What they're really looking for was when they're going to start raising rates. So here's kind of what the Fed funds futures is telling us, which basically is an index to kind of guide us as to their expectations of when a rate hike will take place. So in March, it's roughly about, the March meeting would be roughly about 20%. Really not enough. They don't, basically that's basically saying they're not expecting it to happen in March. May will be about 50%. So they figure May will come in around 50%. Again, a little bit below. They usually like a 70% or higher in terms of a field to get into more of a definitive rule if they expect a rate hike. And then, of course, June is when they expect it right around 70%. So June is kind of when they will expect it. But, again, some of the comments by the Fed were, if we continue the current pace or if it goes up, they'll review it as each meeting happens. So, again, the wild card, of course, is Trump's policies. How soon he's implementing and how soon it will take place, and if it goes into the desired effect of the economy moving forward is at the pace that they'll kind of set themselves. So that's going to be the wild card. Also, there's some investors are a bit concerned about what's going on in France right now. They got an election going on, and one of the guys that's going that may be favored to kind of go into the presidency is Le Pen. I think it's Marine Le Pen. What the concern is, again, is he's running on a platform that may try to remove France from the EU. So that's creating a little bit of a stir in the market as well. So the concern that he may have a legitimate shot at winning the presidency over there. And if he wins the presidency over there, the possibility of France also leaving the EU. So we're starting to see early stages of a possible EU collapse right now, with people removing themselves from it. So, again, something to watch for. It hasn't happened yet, but it's something that they're watching closely. So let's take a look here at the bond market here. We got the bond market going at a nice pace here. So yesterday, as you see, this long star here touched even off this first level, the floor of support, and it bounced back. We closed up only about I think it was like 3 basis points higher than where we left off, so we did have an improvement, and we closed right up here at the 10-day moving average. Since then, we kind of moved upwards, and we're up right now about 16 basis points, which will give us better pricing today. We'll see better interest rates today versus what we saw yesterday. So we had that seesaw yesterday, which is giving us a boost upwards. All right, so that's obviously our good news for the day here, that we see better interest rates today. So that pretty much concludes our video here today. But if you guys want to get more information throughout the day, I am at Mike Bjork on Twitter. You can come over to Twitter, follow me, see updates as to what other things are popping up as the day moves on. All right, folks, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.